But there is something called the Fear-Greed Index, okay? Which basically, you could probably talk about this, what talks about the investor sentiment in the market. Are people being very fearful right now? Are they scared of what's going on in the economy and in the markets? Are they greedy? You know, Warren Buffett has famously said be fearful when people are greedy and be greedy when people are fearful. By the way, rest in peace, Charlie Munger. He died 99 years old. That's Warren Buffett's business partner and consigliere and billionaire whisperer. But pull up this fear-greed index, if you would, real quick. So right now, and this changes every day, every week, people are looking pretty greedy. They're out there. They're basically saying, all right, is it time to maybe invest, take advantage
because they
of what's
think the
going
Fed
on?
is going to drop rates, and they somehow think that's going to be positive for the stock market.
Okay.
When you look at history, it's a complete opposite.
So-
But I could go into that later.
Okay. Well, so ladies, let me just get your quick take. Nat, have you started investing at all?
I actually do have a little bit.
What did you invest in? Where'd you start?
I have some Ethereum, got a little Bitcoin. I have some of my insurance policies getting some index funds I have. And yeah, I have, so those are some of my main ones.
Nice. So before you started investing, what was your biggest fear? Or what is your current biggest fear?
What do you mean? Like my biggest, like?
Do you not, you know, it's Wall Street, it's crazy, it's scary, the market.
She's fearless.
She's fearless?
Yeah,
You
I don't
think
know
so?
about that. I mean, I
Yeah,
just,
Max,
there's always
you've
a
said a
fear-
lot of good things today. This was not the right one.
Yeah. No, I mean, a fear of not being able to provide for my future family, going broke.
Well, that's
fear
what you
of
need a
not
rich
having
man.
resources.
What are you talking about?
Yeah,
Provide for your future
but
family.
at the end of
Stop
the day, you want to make sure that even as, you know, a woman, you also have some sense of awareness when it comes to finance. There's nothing like being completely in the dark and then doesn't work out. The woman leaves, the man leaves, and then the woman's in the dark, moneyless, or she has a whole bunch of money and doesn't know what to do with it.
Like Al
take you in if
Pacino, I'm
that
in the
happens.
dark here.
Yeah. So I
What
think
about you,
it's important.
Janelle? Are you investing
think-
yet?
Yes, in index also,
Yes.
insurance. I would like to invest in property, but I do think what you were saying, that it's important for women to have some kind of financial literacy. I grew up in a household where the man, you know, was the leader and the one that really manages the finances because he does well in that. The woman was kind of just more like, you know, the one that was there for communication purposes, for persuasion, to mediate. But when you do want your own business and you go off into the world and you're an independent woman, you do need to have some kind of financial literacy. However, I do think that it's important to have interdependence also. Like, you don't want to be hyper independent as a woman, you know, so. And
You called it interdependent.
interdependence,
I like
yes,
that.
it's so important. Yes, I mean, as human beings, that's what it is, that how we, you know, how we work. You know, nobody can do anything on their own. Everything is within interdependency.
Gotcha.
But,
Tiffany,
yeah.
have you started investing yet? What's
Well,
your fears? Where are you at with investing?
I kind of slowed down when the pandemic hit, because I opened up my own online business before it hit with money that I was investing with. So I didn't really want to take the bank's money. But I'm like a little fearful just because of all the regulations that the government's like doing, and then it's just like everything's kind of a roller coaster. I'm kind of leaning in, like putting it in property.
There you go.
I feel like
See, guys, you know, we've got financial experts here. We've got one of the biggest jewelers out there in New York. But the ladies got their thing going on too.
I
Is
have
there
a
something
question.
that scares you about the market or something you don't know? What's your biggest, like, I don't know about this scares me?
I just
Be real, ladies.
I don't trust the government.
Okay.
Likewise.
So yeah, who does? But do you think that, because you're obviously, you know, very, very knowledgeable in this, do you think that the wealthy are the ones that are in fear? Because I feel like they're excited, like they're thrilled about the new economy.
Yeah, because
and-
money flows up. It doesn't flow
right.
down.
So I feel like the wealthy
all the money
really
they
are
printed
not
during
in fear.
the pandemic,
They're still printing.
it's all the quantity.
Yeah, so who
quantitative
is it
easing,
really that
it
feels
all
the
flew
fear?
up. All the billionaires got wealthy.
Exactly. So
George,
what do you have to say about that, George?
I would say, yes, they are very fearful right now.
Okay.
And the reason I say that is because...
Wealthy people, you think?
Absolutely. Well,
Okay.
not just... Let's be specific. Not just wealthy people, but people who are incredibly sophisticated when it comes to wealth and finance. So that, as an example, you could have an entrepreneur out there who's done very, very well that could be wealthy, but when it comes to their understanding of global macro or they're not like a hedge fund manager. They're not going to be at that level of sophistication, right? So the reason I say that they're fearful right now is because there's something called a yield curve, and I don't want to bore people to death. But
you told me about this. You said it's super important. The bond yield curve?
It's very, very important.
Yeah.
And it's just the treasuries. So if we look at a 1-month treasury, that's the maturity, compared to a 10-year treasury, the 10-year treasury yield right now is less than the 1 month.
1 month. Yeah.
And in fact, it's less than Fed funds.
Which
and it's substantially.
On the surface, that makes no sense. If you wait 10 years, you
right.
should get more money than waiting 1
That's
month, right? It's just
That's
as simplistic as that.
That's right.
So that is a major issue.
That's right.
Describe why.
So the reason you have the curve invert is because these people that are incredibly sophisticated, that manage quite literally trillions of dollars globally, see a potential recession coming, and the best way to hedge against that recession is to buy a 10-year treasury or a 30-year treasury. So what ends up happening is the price goes up. That be, the demand is increasing, so the price goes up, and there's an inverse relationship with bonds between the price and the yield. So if the price is going up, the yield is going down. So when you see the yield on the 10-year treasury go from 5% down to, let's say, 4%, the price is going up.
Okay.
Right. So the smart money is out there buying the long end of the curve. Number one, for capital appreciation, or to hedge their long portfolio, to hedge their portfolio against a recession. That's what the smart money is doing right now, and that's why you have the 10-year treasury trading at literally 100 basis points less than the overnight rate that the Federal Reserve has set. So going back to my earlier point when I was saying that Bitcoin's going up, or a lot of risk assets are going up right now, the S&P is going up because the market thinks the Federal Reserve is going to lower rates. Well, they're most likely correct. The Fed's going to lower rates, but not because we have a soft landing. It's because we have a hard landing and we go into a significant recession, which is going to be negative for risk assets. And I think that's where the market is way, way, way off sides right now. And I'm backing that up just with history. If you go back to 1950, you can see every single time that the curve is inverted, we've never had a soft landing. We've never had a no landing. And it always uninverts as a result of the Fed dropping rates, which means the stuff has hit the fan. And the stock market always declines the most after the Fed drops rates for the first time. So that's a very easy signal that your audience can look for. You just look at the 10-year yield, you look at the 2-year yield. When that uninverts as a result of the Fed dropping rates, that's when you know this stuff is likely going to hit the fan. You should be kind of risk off there and waiting for the next few months, because you're likely going to have a huge opportunity, just like we saw during the GFC and just like we saw in 2020.
Yeah, that's how I made my money. I remember someone came up to me and they said, this was in 2007, 2008, and I just started my career in finance. I couldn't fucking spell 401k, and I was a nightlife guy in Miami. I didn't know what the hell I was doing, but I got a job as a cold caller. I busted my ass. I started to make some money, and one of my business partners said to me, like, how much did you lose? And when the market went down 50%, I go, 0, because I don't have any money in the market. And sarcastically and sort of influentially, he says, well, now's a great time to buy when everything is sort of half off. Boom, that's how it would introduce me to investing. Now I have $1 million 401k. I learned how to invest. I have all these things going on. But yeah, when shit is at its worst, if you have some capital on the sides to invest, you can take advantage of what's going on. Whoa. If you like that one, click right here to watch the full SOSCAST. And don't forget to subscribe to the channel.